Take a look at this chart. It shows us every instance where long-term holders of Bitcoin are selling. And this spike right here is telling us that these long-term investors have just booked $1 billion worth of profits on Bitcoin. In other words, $1 billion worth of profits were sold by experienced Bitcoin investors. We've only seen sharp profit taking spikes like this 5 times in the past 10 years. Now, if we put the price of Bitcoin on top, a clear pattern emerges. These spikes have often occurred near local tops, just before at least a 30% drop in price. And in 2 of those cases, here and here, it even marked the peak of the entire bull market. That's why these long-term holders are often referred to as smart money, because of how consistently they've exited before major declines. But on the flip side, institutional capital has been flowing into Bitcoin ETFs at a record pace. In just the past 10 weeks, we've seen 8 weeks of inflows, totaling over $13.5 billion, and only 2 weeks of outflows, amounting to just $200 million. That's almost 70 times more inflows than outflows since mid-April. These flows are being driven by institutions, such as registered investment advisors, pensions, and hedge funds. The last time we saw inflows of this scale was right here, in October 2024. Back then, Bitcoin had just completed up a 5-month consolidation, and the surge in institutional inflows helped trigger a 70% rally. If we saw something similar happen today, it would put Bitcoin near $180,000. So on the one hand, on-chain data is signaling that smart money has been taking profits. But on the other hand, ETF data is showing that institutions are buying Bitcoin on a large scale. One of these groups is terribly wrong, and we're going to show you who it is in this video. One key factor to look at is the US stock market. Since its bottom in April this year, the stock market has seen a sharp rally of nearly 30%. Now, if we put the price of Bitcoin on top, we can see that for most of this bull market since late 2022, Bitcoin has closely followed the trajectory of US equities. Some will argue that stocks are overheated and due for a sharp pullback, which could trigger Bitcoin to roll over and see a sharp correction. After all, we've just seen a classic V-shaped recovery in the US stock market, which is a rapid rebound that is often followed by some short-term exhaustion and cooling off. We can see that the last 2 times we saw similar recoveries were back in 2019 and 2020. In both cases, after the market surged to new all-time highs, it saw a 7 to 10% pullback right after, and we believe there's a good chance that we will see this kind of scenario play out again today. And you would expect that kind of equity pullback to create some selling pressure on Bitcoin. But when we look at exactly what happened to Bitcoin in these instances, it's not entirely clear. During the 2020 stock market pullback, Bitcoin only saw a 7% correction before going on a 500% rally over the next year. And in 2019, instead of correcting, Bitcoin actually moved higher as capital immediately began rotating into more speculative risk-on assets. And there are strong arguments for why this could happen today. The US dollar index has just experienced its largest decline, moving down by a massive 12% since January of 2025. Historically, this kind of dollar weakness has been a significant tailwind for Bitcoin, and when we put the chart of Bitcoin on top, the relationship becomes clear. Moves down in the dollar have consistently coincided with rallies on Bitcoin, and dollar strength has typically seen sharp corrections on Bitcoin. Today, we're witnessing the biggest dollar decline since 2020, and before that, 2017. Both of these coincided with large Bitcoin bull runs. So we have a combination of stock market strength and US dollar weakness. And this is something that we've seen many times before throughout Bitcoin's history. In fact, we built what we call our Bitcoin valuation model based on the US stock market and the US dollar. And this is what it looks like. This line here shows what Bitcoin's 6-month returns should be based on the US stock market and the US dollar. And this other line shows Bitcoin's actual 6-month return. When the actual return shoots far above what the model expects, it's often been a signal that Bitcoin is overextended or overvalued. When the actual return falls significantly below the expected return, that's marked periods of undervaluation for Bitcoin. For example, this model was suggesting that Bitcoin was overvalued in late 2017, mid-2019, and in 2021, and was undervalued in late 2018 and early 2023. If we look at what Bitcoin did after each of these instances, we can see that when Bitcoin was overvalued, it marked a strong selling opportunity, and when it was undervalued, it turned out to be a great time to buy. In fact, we used this to time the Bitcoin bottom with our clients at Bravo's research in early 2023, when the model was saying it was undervalued. Today, based on current macro conditions, this model suggests Bitcoin should have returned around 150% over the past 6 months. Yet, we've seen just a 15% gain in the first half of 2025. So, there's a big divergence between where Bitcoin currently is versus where the model suggests it should be. We've seen such a big performance gap only 2 times in the past decade, once in early 2023 and again in late 2020. And both times, Bitcoin rallied shortly after. It's very much possible that we're seeing something similar play out today, with Bitcoin poised to play catch-up from this undervalued position. That's why we're not too concerned about the profit-taking spike from long-term holders that we highlighted earlier in this video. In fact, when we look a little bit closer at these previous spikes, we see that they didn't immediately coincide with peaks in Bitcoin. In 4 out of the 5 past instances, so here in late 2017, early 2021, early 2024, and late 2025, those spikes came well before the actual price peak. What typically followed was even more upside on Bitcoin, with profit taking increasing even further as the rally progressed. So rather than signaling an imminent top, these spikes have tended to suggest Bitcoin is in the latter part of its bull market, which is why, even in the face of large-scale profit realization, we don't view this as a definitive bearish signal. If anything, the data suggests that this kind of activity has historically occurred well before final tops, not right at them. So currently, we still have exposure to crypto at bravosresearch.com. We're taking our clients step by step through our strategy on crypto, but also on stocks, commodities, and precious metals. We send out buy and sell alerts whenever we make any changes to our position, and we take you through our entire trading strategy. You can see all of our closed trades for 2025 and 2024 on our homepage. If you're interested, you can click the link down below and join our service.